Good afternoon. You're watching us here on Midcap Radar from the Motilal Oswal studio with CNBC-TV18. I'm Mangalam Malu. With me, Vivek. The frontline indices marginally in the green, consolidating with a positive bias, whereas the midcap index is consolidating with a negative bias. It's been underperforming today. For most part of the day, we had advances outnumbering decliners, but now as we speak, there are 1,400 stocks which are declining for about 1,100 stocks which are advancing. Good afternoon, Vivek.
Good afternoon. Well, most of the indices are managing to hold out above the positive territory, but it's the mid-cap and small-cap index that continue to trade with slight cuts. But we have quite a lot lined up on the show. Let's start off with the top headlines. Stocks trade in a narrow range and directionless trade ahead of a midweek holiday. Auto and consumer durables eke out gains while metals, realty and IT drag. Mid-caps under pressure.
United Spirits in focus. The government is considering a reduction in import duties on alcohol, especially on Scotch from the UK, with halving of cess a strong possibility. Say sources to CNBC-TV18, a high-level inter-ministerial meeting is likely on the matter soon.
Metal stocks witness selling pressure for the second straight session. Stocks like NMDC, SAIL, Nalco lose over 1.5% each.
Brokerages, Jefferies and Motilal Oswal continue to remain bullish on 361 WAM following its analyst meet. Both brokerages have a buy call. Jefferies sets a target of 1270 rupees on the stock, while Motilal has set a target of 1250 rupees.
Well, that's right. We're looking at the mid-cap end of the markets, the broader end of the markets, and continues to remain under pressure. This is our special segment, Mid-Cap Movers. Today, Nigel is standing by the wall to take us to the mid-caps that are moving around in the session.
Well, thanks a lot for that, gentlemen. Let's start off with a few stocks that are buzzing around and moving higher in very, very large volumes. Some of them should come up for you on the screen. We have Adani Power, one of the big movers in today's trading session. Easy Trip as well is bouncing back. Remember, it's been a big underperformer, but we're seeing massive volumes on that particular one. And Z Entertainment as well, after the kind of correction that we have seen, today it's making its way gradually towards the three-figure mark. So Z is another one that's moving on high volumes. Zomato, it's come off a little bit from the top, but that's still holding in the green with the gain of close to around 1.5%. On the flip side, there are some big volume losers, and top of the list will be Swiggy. Well, that one in fact is down 2.2% odd. So, big, divergence in terms of how both these two players are doing. Zomato seems to be finding favor today, while Swiggy is under pressure. So that's down close to around 2%. Varun Beverages had a big run yesterday. It's falling on large volumes today, down close to around 3.5%. And keep in mind, for this year itself, it's down 25%. And Nalco, well, the numbers were blockbuster, but as we mentioned, that Q3 seems to have been the peak out quarter. So that's why, though Q4 will be pretty okay, the street believes that going ahead, it'll be very, very difficult for them to sustain some of those gains. Moving to a few more gainers then that come up for you on the screen. Thangamayil Jewelry, Mangalam told us they have opened in a new location, I think in Tamil Nadu. And in fact, the street has read that very, very positively. So you can't buy it out there because there are pending buy orders. Stock is locked up close to around 20%. Jindal Drilling, there is some interesting activity from the promoter entity, some kind of creeping as well out there. So that stock, in fact, is up close to around 14%. While Kadam India, we don't normally talk about the stock, but I think there's a special situation playing out there. Could be one of the reasons why the stock is up close to around 12%. Finally, let's wind it down with some of the losers. Deccan Cement, one of the stocks that had a big run in the last week itself. Yesterday as well, it was fairly stable. Today, no luck out there. The stock seems to be down close to around 7% or thereabouts. Dr. Lal Pathlabs falling on large volumes, down close to around 5.3%. And Triveni Engineering as well, down close to around 5% odd. But as you all mentioned, the disappointing part today is the broader markets is doing a relative underperformance. Though the last time I checked, still we have close to around 1,000 stocks that are advancing. Back to you guys.
I take that point, Nigel. Thanks a lot for that. That's about all the movers and shakers in the mid-cap end of things. The mid-cap index is at a low point. But what we'll do is take a short break. On the other side, our excerpts from a conversation with Kishore Patil, who's the co-founder and MD CEO of KPIT Tech.
Joining me today is a guest who's decided to make a move from Mumbai to Kerala to head Federal Bank.
I think wanting to run your own ship, captain of your own ship.
Captain of your own ship made the choice easier.
That was the easier. That is what made it easy. There is best three and next three, and we should lie somewhere in the middle of that pack. The parameters by themselves may change a bit here and there, but the idea is to lie in the middle of that pack, and that's the ambition. we have a non-resident base. It's a moat that the bank has built over several years, and it's probably one of the biggest brands for non-residents in India. These are customers who are very loyal to us. Sometimes second, third generation of those customers are banking with us. If we make an offer to them on the wealth side, I'm sure we have the trust, their trust that they will buy those products from us. We will pace ourselves in a manner that we keep control of our parameters and do not run away with too much investments in the beginning in the hope of getting revenues. We will balance ourselves.
Break into the top 5, which is the aspiration. Doable in the next 4 years?
The place where the bank is currently and where I want to take it, I think it is very well doable.
Welcome back. It's the automotive industry which is going through a transformation of the century. And that's not my words. Those are words coming in from the co-founder and MD CEO of KPIT Tech. Rima caught up with him on the sidelines of the NASSCOM Technology and Leadership Forum. Also spoke with him about the deal pipeline and, more importantly, the guidance going forward. Let's listen in to this important conversation.
The automotive industry is going through probably the transformation of the century. So, and there is also a disruption in the ecosystem. So every OEM, for example, is taking his own steps. I think so they have to catch up with this thing. They have to basically look at how they will handle the drop in the sales in China for them. Basically, most of the European companies have sales which went down in China. So they are developing new markets like US or some emerging markets. So that is the period. It may take some time. The second important part which they are looking at is they are trying to make sure that their profitability they are in a position to increase because they have to compete at lower prices in the market and how they make the money on that. So these are the two basic transformations which they have to get over. It is not just a normal course of business. So that will take some time, I think.
So what kind of a year will FY26 be? Because for your company, in FY24, it was a 39% growth. In FY23 was 36%. This year, you're at 18 to 22%. So what kind of a year will FY26 be, given that we're going through the transformation of the century?
I can only talk about at a high level what we have because this is something which we go out and tell in the month of April and, for the new year. But 2-3 things I think I may say that our pipeline is really very strong. And I think I talked about it last quarter also about having a very strong pipeline. And the other thing we are, broad-based our go-to-market. One is on off-highway and commercial vehicle, as well as there are, apart from that, and including some pass car, there are about 7 new conversations we are having, which are going well.
For FY25, 18 to 22% is the revenue guidance. Upper or lower end?
So higher on the profit end. Higher in the profit, we increase our guidance to more than 21% on the profitability, and on the first half, it is not the lower end. The first half of the guidance,
There are 7 conversations going on right now, which are in the pipeline right now.
Yes.
These are with existing clients, or these are fresh new clients?
These are the new clients.
These are new clients.
These are the new clients.
And most of them are in Europe?
No, it is not like that. They are spread across, but some of them are in Europe.
And are these for large kind of transformational deals?
Absolutely. There are, out of 7, there are at least 2 or 3 which are large deals.
And by large, we mean like $50 million, $100 million?
You can take your guess. I mean, we don't talk about anything less than 50 million for a reasonable deal. Actually, much more than that. So I wouldn't be in a position to put in a name, but I think these are reasonable sizes.
You've been steadily increasing your margins. In FY19, I think it was close to about 11-12%, and now you're at 21%. Will this margin improvement trajectory continue over the longer term, say 5 years?
I think over the period, yes, I believe. What we are not currently we are evaluating this part because we are going to make significant investment into preparedness of the organization for AI, some additional growth. We are expanding into new markets. So we have to balance it out. That's what we are exactly talking about. But absolutely, in the medium term, the margins can go.
All right, those are important words coming in from Kishore Patil, the MD and CEO of KPIT Tech. The stock marginally in the red, but we'll keep an eye out on how it goes. With that, we'll slip into a short break, and as we do that, some good news for our viewers. The India business news leader, which is CNBC-TV18, is now just a click away. We're introducing to you the CNBC-TV18 app. It's an all-new app where you can get instant access to breaking news, in-depth article, analysis, all the financial world updates at your fingertips. All you got to do is download the app either from the App Store or the Google Play Store, depending on the OS that you use. Or if you're confused, just put on the cameras on the phone, scan that QR code which is up for you on the screen. You get a link, and that redirects you to the download link for this app itself. And once you do that, all the updates, like I said, at your fingertips.
Hello, how are you? Good. I know you're doing CNBC for like 30 years. CNBC is only 25. So I IPO ho kyun nahi raha hai, right? That was a comment that you made saying everybody is getting cleared but not us.
I think until 28th November it was not clear that IPO ho raha hai ya nahi ho raha hai.
Maybe the regulators and the government don't want fintech. Fintech as a sector I still see as a sunrise sector. India needs billions of dollars in investment in fintech.
Who breaks the silence? He speaks only for in the business and professional setting. You would not imagine he's an introvert. We are also trying to scale up in UPI with innovative products instead of basic, UPI.
So this diversification is going to be crucial for you, isn't it?
It's a person who's probably living in tier 3, 4 town or city. They don't have the means to go to a different place and earn higher returns or get loans, etc. So for them, we solve the problem of access. Followed with the at heart, she's deeply emotional and she cries a lot.
Really? I would never have thought that.
In our house, we have a competition between her and our kid who can cry more on very silly issues.
You're actually a softie.
I'm actually a softie.
Welcome back to Midcap Radar. Well, let's now get you an exclusive conversation from the sidelines of BioAsia 2025 Summit. Our colleague Winnie Motiwala caught up with Krishna Kanumuri, MD and CEO, Sai Life Sciences, and quizzed him on the company's growth outlook. Let's listen in.
It's very hard to say what the growth will be. If I really look at the way the industry is at this point, it's really a point of capability building. So what has happened for a long period of time, most of the companies had worked in China, which will scale up significantly. But now as this first COVID hit, then a Biosecure Act has come up, customers are really thinking about how do we build for the long run. So right now I would say customers are really picking partners who they want to work with to really make them truly world-class, which can match up to the existing collaborations. So I would say long-term there's a huge growth opportunity. The question is what is the pace of growth is still unknown at this point. But I think we might be underestimating the growth in the long run. In the short run, you still will have decent growth. We're guiding to 15-20% growth. But I think long term, the potential is very, very significant.
Absolutely. You know, what is interesting, I think, is one of the US companies, major companies, spoke about CDMO and Indian CDMO recently. They said how they are also shifting focus and that China plus one strategy that everyone talks about. Right. I want to understand from you, have you seen increased inquiries? Surely are there, that's what I hear. But conversion into clients, is that something that you're seeing coming in from big players from US or Europe?
Actually, I think I'll go a step beyond that. Yeah. I don't think it's just general inquiries coming in. the level of engagement has changed. In the past, it could have been, okay, this is a project, this is a RFP. Now it's become much more strategic. How do we think about CDMOs in India as a strategic partner? Not only in terms of what they can provide us today, how can we make them better in terms of really helping build out our teams, enabling technologies which we're already working on, give us much more forward-looking statements of how they would like to proceed in their own innovation and how we can invest in that direction. So they're looking for partners who culturally understand what they're looking for, understand it's a long journey, and they actually are giving us a lot of guidance in terms of what they would like us to be and investing time and money as well in terms of building our capability. So I think where I see the biggest difference now, it's no longer about the service for them, it's about the relationship. And that's where I see the biggest progress, and I think that's the real upside we're seeing going forward.
And do you think India or your company yourself, you're ready to meet the demand that we may get coming in on that front? Do we have that much capacity to match the demand?
I think we are ready to adapt. To say that we're there already is going to be tough to say, because the reality is companies are only evolve as demand comes in, and demand is just picking up right now. So I think most companies in the space have the ability and the team, the resources to get there. The question is going to be a long journey, because China took 20 years to get here. Our customers want us to get there in 5. So it's going to be a steep curve, but I think the opportunity and capabilities are really there at this point. I think India will definitely be a player.
So from a company perspective, how do you change with times, right? There is going to be a different trend every time after some years, or different importance given to different products or drugs. So how do you move?
This is one advantage of being an integrated player, because you're doing a lot of R&D. You pretty much involve most of the science even before they become very relevant commercially. So because of that, one, you're talking to customers very early on, you're working on the technologies, and we already have a manufacturing process, we have the quality systems in place, and we are commercially approved suppliers. It's become much easier for us to transition from just a discovery to a commercial play. And as we go through discovery, we might work in 10 different technologies, only 3 of them will scale. But we're in a position that we can probably scale up the ones which really get attractive fast. So I think that's one big advantage of being an integrated player at this point.
And for your margins also very interesting,
right,
quite much better than the peers. I want to understand what now drives the margin going forward, and is that something, the high level margins of 28-30, something that is sustainable?
28-30, I think if you look at the global CDMO industry, 28-30 is pretty much the accepted norm.
Yeah.
And even the pharma partners want us to continue to invest in technology, invest in growth. So I think that's a good medium ground to get. For them, it's a good value of service. At the same time, it gives us enough return to continue to invest. It's the best interest of pharma partners to really cultivate their core suppliers. So I think this 28-30% is the accepted norm. I think industry is going to migrate to that number over time.
And if I have to ask your growth rate number for FY 25-26, what should I ask?
Right now, we're not giving it. Like I said, we stuck to a commercial at 15-20%. Sure. And again, this is a bumpy industry. Like, as much as I say, I love to come and say, don't get excited if you have a great quarter, don't get disappointed if you have a bad quarter. This goes in lumps. And in same years, you might have one year 30-40% growth, next year might be 10%. So you can't really predict that. Over a period of time, the growth is exciting, but quarter to quarter, annual is a tough one to talk about.
And over that long period of time, if we say 5 years, CAGR growth, maybe what would that be?
We're still giving 15-20% growth.
15-20%. You're being conservative there.
Again, we hope for more. See, end of the day, as a business, we have to prepare for the best, but also prepare for the worst.
All right, with that, we wrap up on this edition of Midcap Radar with the news that the Nifty is marginally in the green. Sensex not much change from the time when we started the show. The Midcap index down 200 points. The Nifty bank blinking between red and green. Thank you for watching.